Known as the world's most valuable company, multi-trillion-dollar tech behemoth Apple has seen growth slow. And with the stock essentially only keeping up with the S&P 500 since August 2020, the consumer electronics giant may no longer be, well, the apple of investors' eyes.
There's no growth story. And that's what investors are feeling it, and Wall Street is saying that we need the next growth story.
So are the company's glory days over? Take the iconic Apple iPhone, says Barron's reporter Karishma Banjani.
The fanfare around the new iPhone isn't as usual. It's not that high. What's happening? Of course, it's the consumer. While they're spending, their purse strings are tightened somewhat. So that's one of the troubles.
The lower demand comes alongside rising interest rates and high inflation. The iPhone 15, which dropped in September, also saw technical issues such as overheating. However, Apple responded to that glitch with the iOS 17 software update. Apple very much depends on sales from the iPhone. The company's most prominent device, the iPhone made up nearly 50% of Apple's revenue for the quarter ending in June, which is typical for the company. Helping Apple's outlook, the influential demographic teens still love iPhones. A recent Piper Sandler study showed 87% of the thousands of teens surveyed had the iPhone. That number has never dropped below 80% since 2018 and has always been above 60% since 2014. Meanwhile, competitors like Google and Samsung continue to beat Apple to market with new hardware and software features, often at cheaper price points. Keeping its lead over competitors is one big challenge for Apple. China's slowing economy and complex U.S.-China relations are two other hurdles. Han Lin is the China country director at the Asia Group.
And so when you look at iPhones, there's a number of other competitors that have very comparable product features at a lower price point. And so as the economy in China has slowed, there's been a bit of a trading down in terms of various product preferences. If Apple continues to innovate and really add on new features that are really unique across the Chinese market, then we will see a pickup of sales. And in fact, if that happens, that will drive overall revenue, at least for China, and make a manageable impact on Apple stock as a result.
However, China authorities are pushing for their country's consumers to choose products from domestic companies like Apple competitor Huawei.
One other factor that's been important to influence Huawei's product sales has been the fact that as you look at US-China relations, and as it becomes a little bit more volatile, certainly compared to the past, the Chinese government has been encouraging more of a localization strategy. Now, what does that mean? China has been suggesting that, well, if you have two comparable products, a foreign product versus a Chinese locally made product, then perhaps you might want to take a second look at the Chinese products, especially if they're comparable in features, but much more reasonably priced.
In addition to stagnant iPhone sales as of late, Apple has also seen softening numbers for its MacBook computers and iPads. Apple's services segment, however, is continuing to grow. What are some of the innovations and strategies that Apple is looking to rewrite this growth story, if you will?
Talk or get more artificial intelligence into your story. Again, Apple uses a lot of AI into its products. You have Siri, which is, at this point, if you compare it with ChatGPT and if you compare it with other sort of products that are out there, it sort of lags behind in a way.
From its recent multi-billion-dollar deal with Broadcom to the Apple Vision Pro, CEO Tim Cook is eyeing opportunities to expand the tech giant's domain, which may soon be fruitful. In May, Apple announced it would work with Broadcom to create 5G radio frequency elements in the US. The new Apple Vision Pro digital headset will be released in early 2024 and is expected to cost $3,500. A later iteration of the device is already in the works. It will likely be cheaper, setting consumers back between $1,500 and $2,500, and could reportedly drop as early as 2025.
Wall Street doesn't seem to love it too much. Just unfortunate. Definitely has a lot of technological advances. It's just, again, another item that has not gone up to the fanfare that Apple is used to.
Another way the company is trying to spur growth is by looking beyond saturated regions with manufacturing and retail opportunities in emerging markets like India.
I think Apple is right in looking at the types of partnerships that will help them scale up as fast as possible in a lot of these newer markets.
Apple's lackluster growth outlook may leave investors with a bad taste in their mouth. But for Lynn, the core issue is, if not Apple, what's the alternative?
So ultimately, it's an opportunity cost question. And I suspect that at least when you look at Apple, not only from a hardware perspective, but from the software, from its app ecosystem, there may not be that many comparables out there. It's probably reasonable to suspect that even if Apple doesn't grow as fast as it would like to compared to historical standards, it's not likely going to do a massive dive either.
Lim projects Apple will meet its targets in 2024 and expects revenue will improve if the U.S. lowers or even stabilizes interest rates. For Investors Business Daily, I'm Meredith Heyman.